Now, just as the sole proprietorship gives you full control, the same applies to a general partnership. It is simply an arrangement between you and your partners to agree to conduct business jointly. No special filing is required, just standard business license as you would any other business. Each partner contributes, whether it's money or property or labor or skills. Someone may have an idea, someone may know how to execute that idea, someone may have the money to support the business. So contributions vary in partnerships. Each partner can act on behalf of the business without the permission or the knowledge of the other partners. Why? Because you all share in the management of the business. Now, with this shared ownership means that each partner shares in the profits as well as shares in the losses. And with that comes the shared liability of the debts of the partnership. Now, the business doesn't pay income taxes, and that's because instead it passes through any profits or losses to each partner, so that each partner can include those profits or losses on their own personal tax returns. So if it's a 50-50 partnership, that's a 50-50 share in the profits and a 50-50 share in the losses. If you choose to start out as a sole proprietorship or a general partnership, know that once your business starts to grow, both you and the business begin to expose yourself to greater liabilities or greater risks to your own personal assets. And this is when you may want to consider upgrading, if you will, by incorporating for that added protection. Failure to incorporate early. In partnerships, it's common for a partner to drop out early, a year into business or whatever. They drop out early. However, if you decide to go public in the future, your business is doing great, a partner could return demanding some equity because they were one of the original founders. And this could be avoided had you incorporated early, issued shares to the founders. Then at the time that that partner dropped out, did they still hold those shares? Did they sell those shares? It would have been resolved at the point that the partners dropped out. So this is one of the reasons why some businesses fail, because something like that could be crippling.